All right. Welcome back, guys, to the episode Invest in Your Future. I'm your host, Kenny, Coach Kenny, CEO of Current Group Corporation. I want to thank you guys for joining me for another episode. We're here every Thursday bringing on people to help you educate, guys, and help you guys improve, whether that's entrepreneurship, business, money, ways to just improve your lives. And I'm always bringing on guests that can help you guys. I mean, I preach a lot. I give a lot of podcasts and, Twitter, all that stuff. But I always want to bring on other people, too, that have the same kind of mindset and have done stuff that is, I think, very worthy of coming on the show and explaining and telling people how they've done it and maybe help other people who are maybe in not the same situation. But so I want to bring on a good friend of mine, TJ VanGerven. He's a CFP, Certified Financial Planner. This guy is smart, guys. When it comes to money, he went and studied money. So we're going to pick his brain and understand how he's done. He's built and he's a founder of Modern Wealth Builders. It's a financial planning company dedicated to helping equity compensated professionals invest smarter, optimize their taxes, and work on their financial independence. This is the stuff that people need to understand that don't get taught in school. But TJ can come on and help you guys improve that side and be able to help yourself financially in terms of what he's done for himself, obviously as an entrepreneur, but then also what he teaches and how he helps his clients. And of course, I'm going to obviously give all this information out. But TJ, you want to introduce yourself?
Yeah, thanks for the introduction. That was a great one. Yeah, you pretty much hit the nail on the head. So I launched my financial planning firm in 2018. I graduated college in 2015. So very quick turnaround. I don't think to be honest, like in the industry, I don't know if anybody's like created their own financial planning firm that quickly out of school, just given like what it takes from just like a license standpoint, things like that. So basically, since I graduated school, I was grinding. I got into financial planning, financial advising. I worked for a big company, big corporation, got all my licenses, ended up getting the CFP designation, and then really was just trying to figure out, how can I build my own firm, in the most efficient way possible. So lucky enough to kind of put together a runway for myself in 2018, launched the firm, have just changed so much over time, just figuring out, what I'm really offering, who I want to work with, all those kind of things, and just been focusing on the marketing and the sales and the service, and then trying to enjoy myself a little bit playing basketball with you out here in Woburn, and that's pretty much it, man. Just work and play.
That's the life. That's the life. I mean, so let's back up a little bit because I definitely, obviously, I'm going to pick your brain in terms of financials. But what made you want to get your CFP? I want to know that mindset. Like, what was it? What was something? Was it? I mean, and be realistic. Was it you wanted to be wealthy? I mean, what was it that you wanted that made you get that certification?
Yeah, so the CFP is kind of like the gold standard for in this industry for me. It's definitely a financial planner, certified financial planner.
Sure.
But I think I don't want to get in the weeds on like the industry, but when you're looking for a financial advisor, it's important to work with anybody. A lot of people can call themselves financial advisors, and so it's hard to distinguish if you're just like an insurance salesman or if you really provide advice for a fee kind of thing. And so the CFP is really that standard to say, okay, this person has at least a baseline level of education. So for me, it's really about marketability and showing expertise. But to be honest, the CFP is really just a baseline. Like nowadays, if you want to work with somebody, like that's just the entry point. And then also just from like a regulation standpoint, being an independent advisor, a CFP kind of covers your license, what you need to become like an investment advisor, kind of thing. So that was really the main reason for things.
Sure. Obviously, it helps, because every time you put your name, you get to put that CFP at the end of it too. It's nice. Of course, it helps. Like the MD, PhD, all those guys. But no, so that's great. So TJ, so tell me, what is your typical day? What's your typical day? Are you talking to clients all day? Are you talking to potential clients? Are you sales? I mean, what does your business look like right now?
Good question. So I'll just give you a quick, because it's changed so much. You know, obviously in the beginning I had zero clients,
Sure.
Zero assets, those kind of things. So it was mostly marketing, and then over time, it's been a transition to figuring out how do I, run the business, but also continue to market and those kind of things. So in a typical day, I try to structure my meetings and live and die by the calendar now. So everything is driven through Calendly, and I only take client meetings Tuesday through Friday, sometimes Tuesday through Thursday. So I try to segment client meetings those days. Monday, I'm really preparing for the week's meetings, preparing content, whether it's podcasts, blog posts, whatever. And so each day, there's a rough framework and structure to it. Obviously, clients always come first. So I'm answering emails, sending summaries from our last meeting discussion with action items, things like that. I also manage assets at TV Ameritrade, so I'm making sure that assets are invested the way they're supposed to be invested.
Sure.
So it's really a combination of operational and content marketing for the most part, and then meeting with clients. But client meetings, I meet with clients after they become a client quarterly. So it's not, unless they're new clients, we're not meeting super frequently. But it does start to I'm working with 30 households currently, so it's starting to get a little bit more bogged down, and I have to be more efficient with my time and making sure that everything is running smoothly. But
sure.
It's transitioned over time. Yeah.
Sure. And I love that system that you have of just having certain days where you organize your meetings with clients, and then the rest of the days are planning. If you guys understand that as a business owner, you actually have to block time to do certain things. That's what TJ does with his time. He blocks days to even plan for the whole week, for Tuesday through Friday, where he meets with clients. So that's how I understand that, you guys, as business owners, you have to do that. Otherwise, you're just running scattered, which I used to do myself. I never used to have a kind of like a set schedule. And now my schedule is almost set to almost every half hour, because we have to understand that time is that important in terms, especially with blocking. Yeah, TJ. So, and for you right now as a CFP, and you're trying to grow your firm, I see that you're using social media heavily. I love your Twitter. You're always dropping a lot of knowledge. And one knowledge that really stuck with me, and I've written it down multiple times, is, and this is not for me, as more for people out there who have a salary, but it said, don't negotiate your salary, negotiate your equity compensation. Could you break that down for me, please? Because people don't understand how important that is. Don't negotiate your salary, negotiate your equity compensation. TJ.
So the first thing is, obviously it's important to understand that not every job offers equity compensation. So
Sure.
The first thing is to ideally work towards a position where you can get compensated in equity, and if you can't, you can still invest on an ongoing basis. But if you're going to work for a company, and especially if it's like more of a startup type company or a private company, your salary is great. Like, income is nice, but it's taxed more heavily than wealth tax.
Yes.
And if you really want to build wealth, you have to have ownership in a business, whether it's a business that you're involved in or you're buying ownership in a business. So, like, if you're going to work and you're a sales professional, if you're going to work for kind of like a more risky type company where you're going to really pour your soul into it, you're working crazy hours, don't worry about trying to get the most salary. Worry about maximizing how much equity they're going to give you, so stock in that company. Because if you're contributing to the growth of that company, you're going to benefit on the back end from it if that company is successful. And a lot of times, this is how the people I work with, is they work in a startup situation. They were compensated in equity early on, where they're receiving shares at very low prices. And if that company either gets acquired or if it goes public via an IPO, they literally can become overnight millionaires, because those shares just multiply in value when they're opened up to the market, because the market's purchasing them based on growth expectations. So, owning equity in businesses is really the only path to wealth, to be honest. So that should be the primary focus if you're trying to, build towards financial independence.
100%. 100%. TJ, that's, I mean, in simple terms, you have to own something. Own a piece of a company. I mean, I'm in real estate, so I own the real estate. I own the buildings. I own equity in the buildings. Like, there's so many things you can own, and TJ is just giving you a blueprint in terms of you need to have some kind of equity to build some kind of wealth. And he's talking about also you don't need to worry about the salary now. You need to worry about the equity in the long term. That's where the wealth is built. It's not built about the salary now. That's understand that's a big difference in terms of how poor people think and how the wealthy think, right?
Yeah.
TJ?
Yeah, no, for sure, and it's hard. It's really hard because it's hard to. Obviously, we have needs right now.
Exactly.
We have bills to pay.
Yeah.
So it's we want to get as much income as possible, and we want to be able to spend on those things. But if we can kind of delay some of that, and it's hard, you have to figure out what your spending needs are. But if we can delay that and instead, either purchase equity or build equity through our negotiation, then that's really looking at the long-term success. And even if you don't have access to equity via the company you're working for, that's why it's even more important to get in the habit of investing on an ongoing basis, even if it's $5, $10 a week, whatever, into like the S&P 500 or index fund or something where you can just start to build something, get in that habit, and hopefully you can increase your income over time and then start to increase the ongoing investing. So
yeah,
it's a little bit at a time.
That's what I was actually, my next question was going to ask was for the people who have very little money. And that's what TJ just spoke about is start small, $5, $10 a week, whatever it is, as long as you see that nest egg grow. It's funny, I started with small amounts, and obviously as I made more money, the larger the amount I could deposit into it and get, see the nest egg grow even more. I think, and also I get a satisfaction from seeing it. I don't know if a lot of people don't, but actually I get the satisfaction of seeing the money grow every single year, every single quarter. And that's what TJ is talking about. You have to just see some kind of growth. You can't just spend it all. It's really tough. So TJ, so when you're for yourself right now, how are you investing? What are you looking into? What do you see the value?
Yeah, so I invest the same way as I advise on clients. So this one just goes that like I don't trust a chef that doesn't need his own cooking kind of thing, right?
100%.
So when it comes to investing, I definitely lean towards like portfolio type investments, so stocks and bonds, just because that's what I'm comfortable with. I can see it. I understand portfolio theory and what that looks like and expectations. So I have nothing against like real estate. I think real estate is great. It's just like those kind of tend to be the two subsets. And so my thing is I keep it simple when it comes to investing. So I'm really a fan of a passive type style where you're owning the broad global stock market as it's comprised. So you're owning the U.S. stock market. You're owning all the companies in the U.S. stock market. You're owning all the companies in international markets. And then you're owning them in a proportion that makes sense relative to what they represent, relative to the global stock market, and then relative to what your time horizon is for how long you're investing. So the longer time you can invest, the more risk you can take. Risk meaning how much stock you can own. So I own a large percentage of stock. I don't own any individual companies. So it's all, again, high level. My goal is to grow with the market. The thing is when you invest in the broad stock market, you're going to end up outperforming a majority of investors, because if you're just picking individual companies come and go. And yes, you can, if you find that Amazon, you hold it for 20 years, like yes, there's a potential to make a ton of money, but the chances are you're not going to find that Amazon. And even if you do find that Amazon, the volatility of that company, you're probably not going to be able to stomach. So it's about figuring out the best strategy is the one you can stick with.
Sure.
So this is a strategy I can stick with. I can invest consistently. And so my goal is, with my business, I specialize in that. I take that money, I invest in my retirement account, in an individual account, trying to defer as much tax as possible with Roth and traditional IRA investments, 401k investments, and defer taxes, and then just focusing on personal finance. Am I, not increasing my spending as my income increases, and am I being tax efficient? So, and then I do own a house, condo, so I guess I own some real estate, but it's a primary residence, so I don't really view it as an investment. There's no rental income component. I did have a renter at one point, but not anymore. So for me, it's just about focusing on the business, investing in that broad-based portfolio, and just making smart financial planning decisions.
Smart. Keep it simple. Keep it easy. You'll build wealth. So TJ, actually, I want to definitely talk about the retirement side also, because we talked about the income side, bringing in income, but then also now, if a person, and I want to talk on both sides, on person who has a job, a regular 9 to 5, what they can do obviously in terms of retirement, and then also the entrepreneur side, where it's a different kind of mindset, maybe different kind of solutions and products. So on the employee side, what can an employee make sure that they have some kind of retirement? I mean, would you suggest a 401k? Would you suggest to open an Roth IRA? What would you suggest for them to make sure at least they have some kind of stable retirement coming up?
Yeah. So like I said, the most important thing is that you're doing some kind of ongoing investing, even if it's $10 a week or whatever. So if you don't have a retirement plan through work, some people don't have one. So a 401k is only through your employer. Your employer may offer you one. Now, we'll talk about that in a sec. If you don't have any retirement plan, anybody can open an individual retirement account at E-Trade, Charles Schwab, whatever, TD Ameritrade, whatever you want. And you can either go a traditional IRA or a Roth IRA. And there's just different taxation with the two. You only put $6,000 per year into there. So that would be a good starting point. If you're in a lower tax bracket, you probably want to go with Roth IRA because that money already being taxed, that money can grow tax-free. So that's a starting point. The Roth IRA for somebody who doesn't have a 401k or a retirement plan and they're a little bit lower income, they're going to be lower tax bracket, Roth IRA. If you do have a 401k through work, most important thing to look at, do you have an employer match? So a match would be like they're going to give you 3% of your salary as long as you contribute 3% of your salary. So even if you don't have a lot of money, you have things to pay for, you should still at a minimum be getting that match. Because if you contribute 3%, they're going to give you 3% of your salary for free into your 401k, and then that money can be invested in that global stock market. You got to review the investment options in there, and just hopefully there's some low cost options. And so those are the two kind of starting points for, and ideally you want to work towards maxing your 401k. Now we can talk about if it makes sense to max it or not. All things being equal, assuming you have the cash flow to do so, pay all your bills, do everything you want. Still, you want to max your 401k because again, that account it's more tax efficient than investing in like a taxable account.
Okay, that's you. I mean, I think when I had my job, I definitely contributed to my 401k because I just saw that match was free money. It's free money. You definitely have to just take advantage of that. And then now on the opposite side, TJ, if you're an entrepreneur or you're a business owner, what's the best retirement kind of plan for yourself to kind of set up to make sure that your company and maybe yourself is kind of set in terms of retirement side?
Yeah, so like you said, personal finance for entrepreneurs is definitely different than for a traditional like salary employee. So obviously your best return on investment is probably going to be your business. So it's really about finding that balance between, it depends on what your vision is for your business. If you're at a point where you're not really trying to grow, you don't need to reinvest heavily into your business, you like your profit margins, and then you're just looking to kind of build outside your business. It's still important to have that ownership outside of your business for diversification, right? So for me, for example, like I'm not trying to build an empire here. I like to be a sole advisor. I'm pretty happy with my growth. I want to make sure I'm investing for my financial future. So really what you can do is you can still do an IRA, like I just talked about, traditional or Roth, defer taxes through that. And then in addition, you can either do a SEP IRA, which you can contribute like 20% of your profit or up to $56,000 per year.
Wow.
So that's a way to defer taxes a lot.
Yeah.
That's a lot of tax you defer. Yeah. And then on the other side, you could also open a solo 401k instead of a SEP IRA. And the reason you would do that is because depending on how much profit you have, you can contribute more to one or the other. Depending, a solo 401k, you can contribute $19,500 per year. So if 20% is higher than that for the SEP, then maybe solo 401k makes sense. And there's also the Roth solo 401k, so you can do like after tax. So it's all about tax planning. It's like how do you want to use your money to be tax efficient?
Sure.
If you want to fill up those buckets. You also want to fill up a health savings account if you're self-employed and you have like a high deductible health plan. That's a way to defer taxes. That's a way to save for healthcare costs out of pocket. And then those are really the main ways to defer taxes. After that point, you would just be like everybody else investing in a tax account.
Sure. So that's a great point, TJ. You have to, especially as a business owner, as entrepreneurs, you have to take advantage of putting money away without having to pay taxes on it. And that's what all these vehicles he's talking about TJ. He's talking about like the different vehicles where you can put money and not have to pay taxes on that money until you actually take it out, which I think 65, right? 65, I forget that.
59 and a half.
59 and a half, yeah.
But for a Roth account, you never pay tax.
Exactly.
So that's why, yeah.
Exactly. So that's the advantages towards business owners. And that's why we preach to entrepreneurship. We preach, owning your own business, because you get the best advantages in terms of taxes, but then also you get the advantage of growing something that can potentially make you financially independent. So understand there's so much advantage of that by taking advantage of those tax brackets, but then also taking advantage of the retirement accounts that are available to you, and taking advantage of people like TJ who are very informative on this. This is a gentleman that knows this stuff, so you can come with him to and say, listen, I need to fix this tax situation. He can help you divide into proper accounts to be able to save you a lot of money in taxes. One thing too that I preach also, TJ, is the importance of financial literacy, especially for the normal person who does not get taught financial literacy. Could you talk a little bit about the importance of financial literacy and how to continually improve that? Because a lot of people don't know how to do that, and how to even just the simple words of financial literacy.
Yeah, for sure. It's a hard topic, and the term financial literacy I don't love, because it's a little like, I don't know, like you're looking down on people kind of thing, and it's hard. Mm-hmm. It's like, like you said, we're not taught basic things in school, and I don't know what the reason for that is. Maybe there's a higher reason, like trying to keep wealth from dispersion kind of thing. The things is you always have to learn on your own. This is for anything, is you have to always be constantly learning. Don't rest on your laurels. I'm constantly trying to learn new things, and I would consider myself an expert, in certain aspects of financial planning. So it's hard. You have to find the right resources, whether it's people on social media who you trust, and trust. I mean, I have a group, some of my favorite personal finance influencers are Ramit Sethi.
Yes.
He has a book, so a really good, if you're looking to kind of get a little entry level into really a common sense personal finance things, his book is called I Will Teach You to Be Rich. That's a great, it's a little gimmicky, but the book's great about just entry level stuff. Listening to podcasts. I mean, just focus on the fundamentals. Like, this stuff is, like, yes, it gets a little more complicated in certain aspects when it comes to like tax planning. But at the end of the day, like, there's just certain fundamentals that you need to understand. You gotta spend less than you earn. You gotta invest early and often. Like, these things, it's just like working out. You don't go to the gym and expect to get fit overnight. It takes years of discipline and doing the same things over and over again, and then being a little bit more strategic as you start to build out your wealth. But the same core principles apply to you. I think people think, and I see this a lot with clients, is as your wealth grows, you need to be doing more complex and sophisticated things, and you really don't, actually. You could still do the same things that got you there, and it's just that they amplify the outcomes. So don't think that you don't have access to the same things that wealthy people do, because it's just not true in my opinion. I've seen it. I've worked with ultra high net worth people at prior firms, and they're getting the same stuff. So you have access to it. It's just about figuring out how to increase your income, your skills, and if that's not
Definitely, 100%. I mean, TJ, for me, it took me a long time to actually figure out that that financial literacy was that important, because I didn't take it serious enough. I used to spend money recklessly. I mean, I used to get credit cards, swipe them, and not pay them. That's why my credit cards and my credit went to trash. And I had to learn when I went to go apply for a loan. This one that really hit me, TJ, was when I went to apply for a loan and they said, you were denied, you have bad credit notes. And that's when I started like my financial, because I went through that hole of like, I think I had a 580 credit score. And I just had to work my way up, because I realized the only way you can make it in this country, I don't know about any other countries, but in this country, is learning credit, learning debt, learning investing. You learn those things, you'll be fine. But if you don't, you're definitely going to be in a hole always, because you're missing a piece. TJ is especially because he studies this every single day. This is his job. He does this every single day. I think everyone should have a CFP and should definitely have an accountant. It's all these people are important because that's their specialties. You can't be great at everything. You can't. So I think knowing people like TJ, I mean, I'm going to take full advantage of TJ. But TJ, I mean, you know your specialty and stuff like that, but how important is it to have a team when you're trying to build wealth?
It's definitely important. I mean, it's hard, right? Because when you have limited resources early on, it's kind of on you. But the great thing is that nowadays there are plenty of coaches out there who you work with, like it's like a more of a therapist type relationship, and it's more affordable. You know, so I'm part of this group called XY Planning Network, and one of the things is that we always offer like a monthly subscription option, so you don't have to have millions of dollars to work with something like that. Like work with somebody XY Planning Network where you can pay a monthly subscription and they will help you develop a spending plan. You know, tell you exactly where you need to be putting money and help define your goals, things like that. So there are options out there. Don't feel like you don't have money. There aren't ways that can help. And yeah, as you build out your wealth, you can start to have more of a team as far as dedicated planners, those kind of things. And just one thing I want to touch on, because like you said, it is true. This country is great in a lot of ways because there's a lot of freedom, stuff like that. But with that freedom, there is this dispersion of outcomes. And if you aren't continually, if either this country can make it really easy for you or really hard for you. And it's like the line between that is much closer than people realize. So little decisions that you're making each day that you're working towards something can have a massive, impact long term on where you end up. So it's just about figuring out kind of how and the hardest work is up front. If you can get past that hard work up front and get to a point where you build your skill set, where you're marketable and you can earn an income that allows you to live, somewhat comfortably, then it gets much easier beyond that point. Start to increase your margin of safety, build a cash reserve, pay off your credit card debt in full each month, invest on an ongoing basis, purchase a home, so these things take time.
Sure, 100%. 100% TJ. I mean, I believe in the same thing. I believe where you're going to have to do the work eventually. You can either front load it or you can back load it. It's that simple. And I decided to front load it myself. And I think I live comfortably. I mean, TJ's front loading right now by building his business, Modern Wealth Builders. And TJ, so tell us a little bit about what's your 5-year plan for your business? I mean, what are you looking at in terms of how to grow your business? What are you looking for right now in terms of growth? And are you looking to go franchise and go different states? I mean, what's your goal right now?
Yeah, so I'm completely independent, my own firm. Like I said, right now I'm at roughly 30 households. In the beginning, I thought I could work with 75, 100 households. That's not going to work. So, I'm really looking to get to 50 households and just 50 households of people that I really enjoy working with, that I add value to, and that makes sense from a business perspective as far as baseline revenue for what I'm looking to cap out at. Once I get to that point, that might take a couple more years. Once I get to that point, then it's really just about figuring out, what I really want to do next. I'm always going to have this business be the primary thing, but I'd like to explore, other opportunities, probably build a different type of business that's more scalable. But really the focus right now is just making this as efficient as possible, continuing the content marketing, podcasting, everything, just building the brand and just seeing where that takes me. The great thing about putting yourself out there and building kind of a digital portfolio is you get connected with people like yourself. And I've connected with people, on Twitter, like CEOs of companies and people that are so successful, like you wouldn't believe it.
Yeah.
And we're just casually interacting and stuff because I've put myself out there so much. And so that's one thing I recommend is putting yourself out there and building something, building equity in your name, right? You don't have to build equity in your portfolio, build equity in your reputation. And there's opportunities that will come from that. You'd be surprised. The longer you do something and you improve at it, people notice that. And it's okay if you suck at the beginning and the content I put out in the beginning. And it's still not great, in my opinion, but in the beginning it was awful, and it's it gets better over time.
Yeah. And
people respect that. They're like, this person's putting in work, they obviously are disciplined. So there's things that come from that.
100%. I think that's huge because TJ, you mentioned social media especially, and you have to understand that you could use social media as entertainment. Obviously, watch cat videos of people dancing, or you can definitely use it on the other side that TJ mentioned, which is go find CEOs on Twitter, go find CEOs on LinkedIn. I linked up with TJ at the gym, where I found out he's a certified financial planner, and I brought him on the show because I want to help other people because we just connected like that. But you could also connect with people on social media with, the same, careers type, or maybe same kind of companies, or different kind of, areas in the same, doing the same business. Understand that you could do so much more with social media than just watching cat videos. Take it to your advantage, and go ahead, teacher.
Great recommendation. Everybody should read this book. It's for free online. You can buy it for like $10. The Almanac of Naval Ravikant. It's on Twitter. Naval is his name. It's on building wealth, building happiness. Unbelievable about just you gotta read it. But basically, there's an abundance of monetization, and this person is a great client for me. And he referred them to me, and he's like, I've been following you on Twitter for the last couple of years, and I didn't know that. So my point is that you never know when the things that you're doing, that you're putting out there on the internet or social media, when that can pay dividends. So as long as you're consistently giving value to people, eventually that will come back if you go along that.
Nice. I believe 100% too. I think you give out, you're gonna get received back also. So let's go through. We call it a fast five here. What is your number one, let's say, habit that's made you successful, TJ?
Great one. Man, it's just focusing on micro actions. So day-to-day actions. Each day, what are the little habits you're doing that can compound over time, and ideally the habits that provide the biggest future leverage. So for example, for me, it was focusing, for the business side of things, focusing on my website, making sure that every day I'm adding some kind of content, I'm optimizing for SEO, doing little things over time, getting people to review here and there. And now, if you type best financial planner Uber, I'm on the first page of Google. So it's like, you just have to focus on the smallest actions and be disciplined, right? It's also taking care of yourself, eating well, working out daily, and just building these habits. Discipline leads to freedom. So I say that's the biggest thing.
Discipline. It's a great habit. Great habit to have, man. It helps. It helps so much. It's helped me also. Great. And then what would you say, what's the most fascinating or exciting project you're working on right now for you?
Project. I mean, it's still a business.
The business? Yep.
I mean, for me, the podcast is like my, as I've gotten more busy with the actual business, it's hard to create content consistently. So the podcast has been like the thing that comes easiest to me. So I'm really just focused on that and figuring out kind of like the different marketing funnels for that, the top of the market funnel, the middle, the bottom, and just bringing in, ideal prospective clients. Yeah, so that's what I'm doing.
This project, business. All right. Yeah. And this can come on either side, because obviously, like you mentioned so many different softwares here, but I was going to say this question right here: what's the most influential tool you're currently using? Or I was going to say more for like a client. Would it be, open a TD Ameritrade account? Would it be, what tool people could use right now to help themselves financially? I'm thinking.
So for me or for people, because it's different. Because there's a tool that I love right now that for me as an advisor, that's super helpful, but it wouldn't be available to everybody. So for a tool that everybody can use, I mean, if you're not using something like Mint, where you're aggregate, like, here's the thing. I'm not a huge fan of like budgeting, but I'm a huge fan of tracking spending. Everybody needs to know certain numbers about themselves. Like, if you don't have a Mint account or a personal capital account, you need to be able to pull up your phone and say, what are my assets? What's my bank account? What's my credit card? Do I buy student loans? Do I have a house mortgage? Everything in one place, so you can see what your net worth is, and then be able to review your historical spending. You need to be able to say, hey, over the last month, or the last 3 months, 6 months, I spent this amount, and I earned this amount. Do I need to make adjustments? Do I have room to build my cash reserve, increase investing? You need to be able to way to track those things and make it easy on yourself. And set, for example, if you have a Mint account, when you start tracking spending, you can create rules for transactions. So every time you spend money at Dunkin' Donuts, it'll categorize it as fast food or whatever you want to categorize it. And then you can pull up your phone and say, oh, here's what I spent last month. So that's a tool everybody should use.
Definitely have some kind of dashboard for your financials, man. That's a simple thing. That's a great tool to have, TJ. Mint. I was going to ask you this question. What's the biggest mistake you've made, and what have you learned from it?
That's a good one. So many mistakes. I'm trying to think of like the biggest one. biggest mistake I made is thinking people would care about my business, like friends and family.
Yes, yes, yes.
So I would say, if you are trying to be an entrepreneur or something like that, definitely do not depend on your friends and family. Because just because people love you or care about you doesn't mean that they care about what you're offering. You need to find people who are looking for what you're offering. You need to understand, is there an actual pain point and an actual solution? Because people need a solution to be able to move forward and gain traction. So for me, it was just, not really focusing on vanity metrics on social media, but focusing on putting out content for the type of people I'm trying to attract, and really focusing for me on like Google and trying to get qualified people through Google who have a problem. They're typing in their problem and they're finding me. Right? It's hard on social media. You're saying stuff, but people aren't looking for anything. In Google, they're looking for something. So just my biggest mistake is thinking that people would care about what I was doing.
Yeah, same here. Same here, man. That's it's a tough thing when your family doesn't show the support that you expected, man. It's a tough thing. But you're like, they're not supposed to be the customers anyways. So and you gave us some great books and some great references. But who would you say is the most influential person that has helped you with your business or your life? Could be anybody. I mean, you mentioned Naval, which I follow his Twitter. I mean, his Twitter is probably one of the best Twitters I could think of.
Okay,
yeah, exactly. So but any other influential person that you follow that helps you?
Yeah. So if you're looking for somebody, another great book, Psychology of Money by Morgan Housel, just so good about understanding perspective around history and money and how to think about money. Morgan Housel on Twitter, I would recommend. So good, super influential to the way I think about financial planning. But yeah, I mean, Naval, for like people I don't know, I would say Naval, Morgan Housel, Jack Butcher on Twitter as well.
Yes.
Unreal, Visualized Value, really good. I like Ramit Sethi for influencer for personal finance. I mean, personally, Michael Kitces, he's founded XY Planning Network. He's also probably the best financial planner in the world as far as knowledge of financial planning. He's been a massive influence on my career.
Nice.
So those are the people.
Yeah. Nice, great. And I mean, I know you have a podcast also, Modern Wealth Builders podcast. Tell us a little bit about your podcast, TJ.
Yeah. So it's called Do More With Your Money. It's available on pretty much all the main platforms. It's a big collection of financial planning topics, anywhere from personal finance tools for entrepreneurs all the way. Recently, I've been talking a lot about equity compensation. So if you are receiving equity compensation, how to maximize that, how to think about concentration risk. So, if you do hit that windfall rate where you have a large percent, all of a sudden you have a large percentage of your net worth tied to one company that's publicly traded, how to think about managing that, because if you are trying to achieve financial independence, which means that you can replicate your spending needs from your investment assets, plus any fixed income sources from your real estate or anything you have.
Sure.
How to think about that, how to minimize the taxes, and just how to get to a position where you're diversified and you're not at risk of losing it after gaining. So that's what I'm talking about. But there's also a lot. I mean, I just put out a podcast episode today about timeless money lessons. So that's very applicable to anybody.
Nice. Definitely, I 100% check out his podcast. I listen to every episode, man. I have to listen to smart people, smarter than me. So I listen to his podcast. I suggest every single one of you guys go listen to his podcast. And so where can people reach you, TJ, if they want to reach out to you?
Yeah, so the best place, Twitter is my favorite platform, at TJ VanGerven. I think that's what it is. Just say it. And then if you just Google TJ VanGerven, or if you go to modernwealthbuilders.com, you'll see all my social media platforms. But I'd say Instagram, TJ VanGerven, and Twitter are the biggest ones. And yeah, always open to questions. Happy to answer them when I got free time. So.
Nice. Well, listen, TJ dropped off so many jewels, guys. I mean, I hope you guys picked him up. I hope you guys took notes on this. I mean, if you didn't, go back and listen. I mean, he gave you almost a significant financial plan for free. for free, guys. I mean, he came on my
Right.
podcast. Yeah, pretty much. He didn't get paid, but he gave you guys almost a certified financial plan right now on the podcast in terms of saving, making sure it's constant, and make sure you give yourself a global exposure so you don't get hit with those symbol companies that can go up and down and be fluctuating. He taught you how to, be able to grow your business by marketing, being able to get the certifications that you need to, and how to get, how to do the same thing that ultra wealthy are doing. Just follow the ultra wealthy, just emulate what they're doing, and you'll get the same exact results. So TJ, first of all, I want to say thank you, man, for taking the time. I appreciate it. I know you're a busy guy, so I appreciate you coming on the podcast. Any last words out here for the people before we sign off?
Just keep getting better, man, day by day. Keep going. That's it.
Keep going, man. Keep going. And guys, TJ, thank you for coming on. I appreciate the time. Guys, listen, thank you again for coming on the podcast. Thank you for on Instagram, on Facebook, on Zoom, on YouTube, on the podcast. Give us a thumbs up. Give us a like. Leave your comments. Leave your questions. I'm going to put TJ's information, all his contact information in the show notes so you can reach out to him. Please reach out to him if you have questions, if you have any other issues you want to get to your finances in the right way. So TJ, thank you very much. Guys, I'll see you next Thursday. I'll see you at the top.